Okay, let's get in Mayuresh Joshi then, Director Research at Marketsmith India, who joins in. Hi, Mayuresh. Good morning. Good to see you in early morning. Tell us, Sarda Energy, any view on this name? 20% yesterday, locked in upper circuit.
Morning, Nigel. No, I think great set of numbers. And if you probably look at the management commentary and construct, they're probably assuming that energy will become their core vertical as we head into the next few quarters. Obviously, I think the thermal assets that they've got, roughly 760 odd megawatt, the renewable assets that they've got, primarily out of the hydel assets that they're building in, including the Sikkim hydel power plant. I think that has significant amount of EBITDA margins, and even the tariff realizations for hydro projects have got significantly higher, backed with sufficient amount of PPAs. So our own sense is that with the kind of cash flows that they are generating, the value additions that is happening outside pellets. So obviously, the management just mentioned that pellet prices are moving northwards. But if you look at sponge iron realizations, if you look at the billet realizations, you look at ferromanganese, silicomanganese realizations as well. Steady state, the ferromanganese around 70,300 odd, silicomanganese around 72,000 odd. So I think if these realizations remain steady state, along with the integrated operation that Sarda probably has, both in terms of its coal mines, and again, I think the SKS Power acquisition, which is also backed with coal mines at Gare Palma 17, I think that clearly adds in terms of superior market performance getting reflected on their energy vertical. So as for the management say, I think if they're able to probably replicate this performance and energy taking center stage as we head into the next few quarters, numbers will still show significant improvement. Obviously, I think the only risk factor remains how pellet prices move, how demand probably comes through. But because of their captive consumptions and integrated operations, I think a large part of this is well shielded. So a great set of numbers. I think on our ratings and rankings at Marketsmith India, I think it looks positively for us. So we remain optimistic.
Well, I remember, in 2024, when they actually backed this asset, Mr. Kamal Sarda, who's the promoter, he made a very, very rare appearance here on CNBC-TV18, one of the only appearances in the last 15 years or so. And he said, this is going to be a game changer. And it appears now those benefits are flowing through. And that's why the street, they're positively surprised by those numbers that did come out. Because SKS Power has transformed the company from just being a metal company to a more, a non-steel, non-metal kind of company. So more structured, and cash flows as well can be predicted. So street likes it.
Mayuresh, as a house, are you recommending buying IndusInd Bank? That's the big stock in focus, big change. Rajiv Anand in the helm. He's a seasoned banker. He'll instill confidence. And at the end of the day, IndusInd Bank is still about 45% away from its 52-week high. So, what's the house call on IndusInd Bank at these levels?
I think that's an announcement that the street will probably write, Reema. Good morning to you as well. But what really transpires is what is the change in numbers that one really expects. Now, one really assumes and presumes that the worst in terms of reporting, because of all the issues that they were facing, is largely behind them. And it's always going to be a task in terms of reconstruct of the balance sheet. Now, the hope here is that there will be improvement in every passing quarter as we come through with a clean slate that the new management will now begin with. But I think how these numbers will stack up is going to be important. The second aspect, obviously, from a valuation perspective, absolutely attractive as we speak. But again, I think there has to be some element of confidence that the street will probably need in terms of reported numbers going forward and the base building quarters that probably happen over the next few quarters. So at this point of time, I think we're probably neutral onto the stock. We still continue to prefer a stock like an ICICI Bank among the large names.
Okay, ICICI Bank, he is the man in charge, man and at the helm. And of course, you heard it right here on CNBC-TV18. Ritu Singh breaking that story several days ago. Mayuresh, hi, good morning. So, in a nutshell, I think the sense that one's getting, and I've been looking at notes from this morning, Citi had a call yesterday, Motilal, and there was also Goldman Sachs, we spoke to them as well. Consensus seems to be that, yes, Q1 is muted, but it's not a total washout. We spoke of Sarda just now. Anything else, that meets your buying criteria or has moved up into your buying category looking at the Q1 performance?
Morning, Surbi. So, again, I think there were a whole host of numbers that were relatively good as we speak, as far as Q1 is concerned, whether it's large caps or mid caps. So selectively across sectors, I think within the auto names, as I mentioned earlier as well, I think Hyundai is something that we continue preferring. Our own sense is that numbers were decent. The kind of market share gains that Hyundai has probably done because of all the product mix and the launches that they've probably done, whether it's Creta, whether it's Exter, when you're talking about the EV platform, the export mix that they've probably got, even in the current context, the capacity expansion that they're probably doing from 8 lakh 24,000, they're expected to go up to 10 lakh 74,000 units. The margin performance, which has been relatively decent. And yes, amidst competition, our own sense is that the kind of market share gains and stability that the stock is probably exhibiting makes it a very strong case. So this is one stock from the auto space that we continue backing. Obviously, I think agrochemicals as a space is something that we've continued liking at Marketsmith India for a long, long time. And our sense is that with better monsoons, farm gate prices, which are relatively decent, benign input costs, the expectations of strong volume growth led with better pricing and relatively benign input costs, the operating leverage should play out very effectively. And therefore, stocks like a Coromandel, stocks like a Deepak is something that we continue backing at Marketsmith India. Obviously mentioned ICICI Bank within the large cap names, which continues to remain in focus. Obviously, I think the NIM compression has been there for the industry as a whole. But I think with a lag effect, I think as lending rates also start coming back in tandem, I think somewhere the NIMs probably should start becoming far more stable and relatively better growth expected in the next few quarters. Hospitals as a space within healthcare is something that we continue preferring. And largely, I think within the consumption basket, I think selective FMCG names, Marico is something that we continue liking. We're obviously looking at how Britannia will post its numbers. But I think consumption as a story, which includes FMCG, apparel makers, I think those can make a very strong comeback in the second.
What about Godfrey Phillips? Not good for health, but those numbers look quite good. And the commentary that came in from Philip Morris as well was fairly impressive, with regard to India business. So they gave a bit of a hint. And now, as Mangalam told us, the numbers are quite good. And it appears they are gaining market share over the last few quarters. Your take?
No two ways about it. And obviously, I think the inelasticity in terms of demand, as far as the core cigarette business is concerned, obviously continues, Nigel. So to that extent, I think the numbers, whether it's Godfrey Phillips or whether it's the core cigarette business for ITC, I think those are going to be cash cows for both these companies. However, our own sense is that it's a tad bit too much, specifically in the case of Godfrey Phillips. And therefore, I think we still continue preferring the other basket of stocks, as I mentioned, within the FMCG names, or something even within the alcohol beverages space. Radico has posted a brilliant set of numbers, in my opinion. Even this space selectively should continue to.
Okay. All right, Mayuresh, we'll leave it on that note for today. Thank you very much for joining in. We look forward to a conversation again soon.